Ira Epstein of Linn Associates with your morning flash update for this Tuesday, the 22nd of December, 2020, about 9:30 a.m. Central Time. Now, keep in the back of your mind where we're at. We're a day and a half away from the Christmas break. Thursday's only a half day of trade. The markets are going to thin out. As they thin out, you'll be looking for moves that you probably don't get. You get the moves in the action mostly now at the beginning of the day and in the last part of the day, and in between, you sort of languish. We're looking at most metal markets down fairly hard today as the dollar is picking up momentum. My guess is the dollar wants to go back to its 18-day average of closes, which I'll cover this afternoon in our wrap-up in the market. But that'll put pressure on most of the foreign currency trades as traders unwind the very popular trade, which has been to be short the dollar, long other currencies. I don't think that that's going to last very long, the unwinding, and I think it'll go back into the trend. But I recognize where we're at right now. I've done this 5 decades, 50 years of trading, and things don't change. And if you have that type of experience and you don't learn from it, then there's something wrong with you, or you're not meant to be in this part of the business. So I can see that unwinding. As we take a look at the bonds and notes, fairly stable. One of the big bets that seems to be coming about is traders wondering if the economy is going to pick up somewhere in 2021. With the new variant of this mutant COVID-19, it probably gets pushed back a little bit, but as long as the vaccine works, not that much. But they question if that's not going to test the Fed. It certainly could. You're seeing also in the energy markets that they're paying attention now to the new variant strain and that could push things back. Grain markets, I think they're marking time more than anything else. Now, in looking at the day's events, both chambers of Congress did pass today, last night actually, the $900 billion in a COVID relief bill. It is not a stimulus bill. It helps people in trouble. It's not meant for the general economy. It's really meant for that part. However, there's so much pork in this bill. At over 5,000 pages, it's more than all the Harry Potter stories, all the books ever written about it. I mean, think about that. It's insane. How do you read it to know everything's in it? The third quarter final GDP up a little better than thought, just at 0.3, but it's better. Then you've got the chain-weighted index, which was down a little from what the market had expected, but not out of line. You can see the PCE index where it came in. Everything here is not much. Retail sales down 0.9 for the first 3 weeks of December. That's not the best figure. It's still better than last year, but it's not a real good figure. So stalling right here, yeah, people aren't going to stores, they're buying online. Does it make up the whole difference? I doubt it. The Richmond Fed. Now you're seeing that the manufacturing index was strong, but after that, the shipments fell. You go up in the new orders, you go up in the employee index, which is all really good news. You didn't do too much damage in the prices paid. You did better in the prices received, and the service sector part down. Service sector, I don't know, that could be a seasonal thing too. You have to be careful. The conference board, this is where you see some of the nervousness from all the COVID headlines. All of the numbers came in on the weaker side, and the National Association of Realtors, home sales were down 2.5. They expected it only down 1.5, but let's understand. The prices paid are nearly 15% greater than they were at this time a year ago. Mortgage rates are lower. It's winter. This market will get another resurgence, probably a monster in the spring as people realize they can go out again. They'll shake off all this malaise that they have with all that is going on right now and try to figure out where does this all carry them. So you have to be a bit cautious right now. Pull in your reins, trade lighter, not heavier, would be my advice to you. I want to remind you that we do offer our guide to technical indicators, volumes 1 and 2. Now, we've made these into PDFs, and they will give you all of the ideas that I'm talking about at the end of the day wrap-up. Stochastics are covered, moving averages, trend lines will be there. Swing lines aren't, because I wrote that and I refuse to put it in writing. But you get all that. Then how do the spreads work? Do they call market moves ahead of time? Elliott wave, Gann lines, a Rune indicator, price-time relationships, all that comes in, the ag primer, and of course, people forget about this, money management. Folks, Money management is as important as any other tool. One of the things in my charting course that I teach people is rate trades. In other words, set the maximum that you're willing to lose on a trade before you enter it, and then from that maximum on trades, start breaking them down into low risk, higher low risk, higher medium risk, lower medium risk, and higher risk trades, maybe a couple of variants. I did that years ago, and it made a huge difference as to how I looked at the marketplace. Everybody has a risk tolerance, and more than that, what you have to pay attention to, I think at all times, is preservation of capital. It's a guarantee you're going to have losing trades. Will you have winning trades? Well, that's the hope. I know you're going to have losers. No pro doesn't, no amateur doesn't. The key is to control the losses, let the profits take care of them. If you don't have a methodology, it's hard to get into the profit range. Anybody can throw a dart and you'll hit that bullseye eventually, but you're also going to miss the board. How do you find out and get this? Go to our website under free offers. You can call my staff. They'll work with you. In the meantime, I will see you later this afternoon at our market wrap-up. You have a great trading day.